Welcome to the Morgan Medicare Minute. I am your host, Nicole Morgan, with Morgan Medicare Solutions. I am the owner, and we are located in Sherman, Texas, and licensed in 31 states. And today's podcast is everything about Medicare. However, we're going to talk a little bit different subject. We're going to talk about long-term care. And today I have with me my good friend, all the way, you flew in for this with me. I have Gene Plochet. Said that right?
Yes, you did.
Yes. So he flew in this morning, and we've already done one long-term care workshop today for my clients. We're doing one tomorrow, but today we're going to talk everything long-term care. And that's not typically a subject that, you really talk about or people want to talk about, but we're going to talk about everything we want to talk about long-term care. And the first thing I want everybody to know is about you, Gene. So welcome to my little show all the way. We're doing it in Denison, Texas. I love this studio, podcast on Main. But tell everybody about yourself. Where'd you come from, and how long have you been in this business, and how we are connected?
Sure. Been in the business for 33 years. I live in Baton Rouge, Louisiana. Wife and 2 children. Been really involved in the long-term care business for about 15 years now. Mm-hmm. Unfortunately, I had to go through it with my father, and it really opened my eyes to this whole long-term care dilemma that we're going to be faced here in the U.S. or facing in the U.S. So, I've been doing financial service business for 33 overall, focused heavily in the long-term care for 15. And live in Baton Rouge, have a daughter just graduated LSU. Amen.
Yeah, there you go. See, you're sporting the LSU shirt.
That's right.
Had to bring that to Texas. I understand.
A little baseball going on right now.
We like LSU. We have family in Louisiana. It's good. It's all good.
So, and then a son that just started LSU this semester, this past fall. So, a freshman.
Oh, good. Good.
So, yeah, glad to be here.
Well, so you're with Simplicity Group.
That's correct.
So I'm an insurance agent, and I am a long-term care. I have my designation, certified long-term care specialist.
Correct.
And so I'm able to sell long-term care policies, different types of policies, not just your traditional. I want to talk about that, what traditional is.
I'd love to.
But you're with a company called Simplicity Group. So as an insurance agent, I primarily focus on Medicare, but I focus on Medicare and everything that goes with it. But Simplicity Group is specifically for my long-term care. So you're like a broker.
That is correct. Simplicity is an insurance brokerage firm. They're one of the top 2 or 3 largest in the United States. We actually have probably 60 to 65 carriers that we have access to. So
that means I have access to any
exactly.
care. So I can really tailor a policy down or a product down for a client that specifically fits their needs.
Exactly.
Yeah.
Exactly.
So I'm not limited.
No one product is for everybody. You have literally every tool at your disposal to help your clients.
You are my partner in that.
And I am your partner in this.
So if I met with a client, then
that is correct.
They're going to get you too.
That is correct.
I'm going to drag you in there.
We're a partner deal here.
Yeah.
But that's what you get by working with a large company like that you have the flexibility. I like to call it open architecture for your clients, that you can take care of them and what best fits their needs, not some particular company or, hey, I only have one product to offer. Well, that's what they're going to get.
People need options.
Absolutely.
People need options. So I guess we'll just jump right in here. What is long-term care?
Long-term care is when someone, doesn't necessarily have to be an elder person, but when someone loses the ability to take care of themselves, most of the time it's in a functional manner, and usually it is an elder person, but it does happen to younger people, accidents and things of that nature, but lose the ability to take care of themselves, whether they become a risk to themselves, hurting themselves, or someone else, and lose that independent living that we all enjoy. So that's kind of what long-term care is. Everybody thinks long-term care is nursing home, and it's not. It is really just that
That can be an
loss.
aspect of it.
It absolutely.
It can be an aspect of it. But let's just get this out of the way, since this is a Medicare minute, and I got the Medicare in there. Does Medicare cover it? I will answer this. Medicare absolutely does not
That is
cover
correct. You are very correct.
long-term care. And so we've said this back and forth, you and I talking about how we plan for everything. We plan to graduate, we plan our school, we plan our marriages, we plan our babies, we plan, we plan everything. We plan our retirement.
Correct.
And some people, forget to plan for Medicare. That is a part of retirement, and we got to throw that in there. But then people stop and they do not plan for the rest of their life until something happens.
Then it's too late.
Then it's too late. And they don't have a plan in place, and somebody has to pay for it.
That is correct.
Either you are prepared in your financial status to self-fund it all, which is
not the most efficient way to do it.
No, it is not. And or your family is burdened with it to pay for it. And in my past, being in healthcare, I've actually helped a lot of my patients that had a long-term care policy put it into action because they needed extra care.
Great.
Beyond home health care. And I want to kind of, and I may be jumping around all over, but help me keep on track.
Sure,
but
sure.
Just for our listeners, there is a difference between home health care and the kind of care that you get in long-term care. That would be
yes.
Long-term care is like a caregiver, a sitter.
That is you not being able to take care of
Non-medical.
your right. That is non-medical, that you're not able to take care of yourself, and they're doing things to help you that you cannot do.
Your
functionally.
daily living.
Your activity. There's 6 things called activities of daily living. That
You're speaking to the choir. I'm an occupational therapist. I know all about activities of daily living.
That's correct.
Yeah.
But that's what triggers a long-term care event, a long-term care contract to pay out benefits, is not being able to do 2 of those 6 or a cognitive
So what
impairment.
what are the 6? There's
Okay.
bathing.
These are the 6 things that you do first thing in the morning. You transfer out of bed.
That's right.
You dress yourself. You go to the bathroom,
Right.
toileting.
Right.
You feed yourself. You're bathing and continence. Okay.
Right.
So it's the 6 things that are there that you do really first thing in the morning.
Right.
Okay.
But then the home health care, people get that confused a lot. So Medicare will actually cover home health care. And in the definition with Medicare, home health care is intermittent. That means come and go health care in the home.
Right. Whereas
So like
long-term care is not intermittent. They are with you. They are there.
Yep.
Now, they can come in for a half a day or whatever, but
right.
it's a longer period of time where they're
Right.
there with you.
And typically it's non-medical,
Yes,
where home health care that Medicare will pay for
that is correct.
is medical. I'm an occupational therapist. I used to do home health care.
That is
And
correct.
a lot of times the confusion comes because people consider a caregiver as home health care. And I'm not sure how to,
Well-
they just get it confused. I always have to, clarify it in most cases.
Most people think, which we talked about in our luncheon today, that it's going to be long-term care will be covered. Oh, my health insurance is going to cover it. No, it's not. It's going to be covered by Medicare. No, it's not.
No.
So I would kind of like to talk about that scenario like we talked about today in the luncheon or the workshop is really
Right.
what it was.
Yeah, it was great.
I always use the example of let's say I have a stroke, okay?
Yeah.
And they call the ambulance and they bring me to the hospital, and the hospital is for saving lives, okay?
Mm-hmm.
Once I am stable, the doctor's going to come in and say, hey, we need that bed. You're stable. You're not about to die.
Right.
We've saved your life, but you need rehab.
Mm-hmm.
So he's going to write up the instructions and do all of this, and my family, my wife, will then find what rehab place that I'm going to go to, whether I go 3 days a week or I go to inpatient rehab. Okay, Medicare will cover that visit because what they're trying to do is get me, the patient, back to be independent again, to be
Right.
independent living.
And so let's clarify, like
Sure.
rehab, just for definition. So there is inpatient rehab, which Medicare does cover that.
Correct.
Medicare also covers skilled nursing,
Correct.
which is not as intense as an inpatient rehab, but Medicare covers both of those.
Correct.
So let's
So-
pretend you're in the skilled nursing.
I'm in skilled care. So what they're trying to get me to do is to remember, I've lost 2 of these activities of daily
Right.
living. So they're trying to teach me how to dress myself, feed myself, or
Right.
whatever I am trying
Get
to
your
do.
independence back.
Get my independence back. Okay.
Mhm.
So that will be covered for 100 days. The first 20 of it is paid 100% by Medicare, 20 through 100. So the next 80 days, there's a small deductible. And I think from previous conversations,
Well, yeah, there's that Medicare. So we could go down a rabbit's hole, okay? But for sake of time and all of that, there is a way to explain how Medicare really covers
right.
skilled nursing. So for the sake of this being long-term care,
Sure,
but
sure.
100 days in skilled nursing is typically what Medicare will
correct.
cover.
That
Okay,
is correct.
so
once that is either what's going to happen in that 100-day time span, either I'm going to make progress as the patient
Right.
and I'm going to get better and move on with my life and I've recovered and let's go on,
Mhm.
or I'm not going to make progress and it's going to be a lifestyle that I am now living with. And that's where long-term care comes in, is that after I'm going through this process, this timeline, and usually around the 75 to 80 day mark, they start having conversations with the family to say, hey, Gene is not making any progress. We've got everything covered that we can. What's your plan at the end of 100 days?
always ask that. Yep, it always gets asked.
What's your plan? And usually that's when the family has I call it deer in the headlight, going, uh-oh, what are we doing? What are we doing with mom, dad, spouse, whatever the situation may
Or
be?
you get, I can't take care of them.
No.
I work.
Exactly.
I've got kids. I can't take care of
So-
them. So
so
there's no plan in place.
There's very, very few people have a plan in place.
Yeah.
Okay. And that's where, starting with your conversation that you said, we plan our lives. We plan everything about our lives. That is I'm going to call it the end stage of life that we need to have a plan for. And a plan doesn't always mean that they need to buy an insurance policy. A
Right.
plan may be, hey, I'm moving in with my daughter. Well, does she know that? If she's part of the plan, she needs to know it. There
Yeah.
needs to be a plan in place that if and when this situation happens, there's a plan. We're going to flip this switch, and this is what we're doing. These are the steps we're doing. This is where we're going. This is how we're paying for it, whatever.
Right.
Okay, a plan. So most people don't have anything, okay? 70% of Americans will need some type of care throughout their life. Well, guess what? The other 30%, they're not getting off the hook. They're the caretakers for the 70%
That's
that need to care. So
That's right.
it's affecting us all
right.
in some way, shape, or form. It will affect everybody some kind of way.
And I don't think, I'm just going to throw this in there. I don't think that it's something that you absolutely need to start thinking about in retirement. I think, I am, even as you get into your career and you start, because we think, once you get in your career and you've got a steady job and whatever, you need to start planning for your retirement because
Absolutely.
it costs. People don't realize the cost of long-term care. They don't realize just what it costs to just age.
No.
Or even after
Absolutely.
retirement. It is expensive. So you were quoting some tools that I have access to actually everybody does have access to it, don't they?
Yes.
To see what the cost of long-term care would be.
Absolutely.
Yeah.
Absolutely. There's several
So,
websites out there. You
yeah.
were referencing, getting ready to mention one. It's called Genworth Cost
Genworth.
of Care.
Mm-hmm.
There's several other carriers that also have the same. One of the people, the brochures that we use today, the One America
Right.
brochure,
Yeah.
they actually have a link on their website that you can use. So there's a lot of them out there that will show you in your geographical area what the cost of care is today. You can escalate it out 10, 15, 20 years to see what that cost is. And
It's different in every area.
Absolutely.
Depending on where you live, what
So-
the average is. So let's talk about what it actually costs. So people, like I said, they wait till either after retirement. I think it should be thought about and planned, well before you even retire.
Well,
kind
kind of on that note, there's been a lot of studies that have obviously people are really starting to pay attention to this topic. And the cost of care were used to be where people were looking at it probably when they were 65 to 70. Okay, that number's now starting to creep down because the younger generation are having to take care of their parents, and they're going, wait up, we don't want to put our kids through this. So
we had that
now-
happen today in the
yes,
workshop.
That absolutely, sure did. That couple that was sitting in the back. So it is where people are going, okay, I don't want to leave this burden to my family or my kids. So now people, the actual age has come down to about 55, where people are really kind of getting serious about it. They may not be acting and buying, but they're starting to study and they're starting to ask questions and kind of going down that path.
Yeah.
But back to your question about what do things cost?
Yeah.
Today in the workshop, one lady said that they're actually going through it currently right now with her mother-in-law.
This is their second time to go through it.
That is correct.
Yeah.
That is correct.
With parents.
The other one was been some years back, but the currently situation right now, they just moved, I'm not sure who the lady was, but they just moved her mother-in-law to a new facility, and it's running them, they said, about $5,800 a month. And they moved her.
And this is a nursing home. Let's clarify. It was not
That
an
is correct.
assisted living.
That's correct.
It was a nursing home that was running them $5,800 a
And
month.
they moved her from a place that was $11,000 a month. So that could really, really stress really anybody's financial situation with that kind of cost. I mean, as I asked the room today, and I think we had, 30, 35 people in the room today, I asked the people in the room today is how many people every month write a $6,000 check? Every month. Think about it. Not. I don't know of many people that write a $6,000 check every month for regular living. We probably do. We spend it all, but it's not in one check.
Right, exactly.
And if you think about what I actually just said, we all spend that amount of money in our cost of living, our homes, our groceries, our everything, our life. Long-term care is not in that. You're dropping another $6,000 on top of that normal monthly living.
Else.
So if you've got a husband and wife, guess what? If one of them needs care, the household still has to function. So you're adding a really big cost on top of your normal livelihood, your normal living expenses.
And I've had clients when I've brought this up, they've always said, or some of them have said, and it's always stuck out to me because now going through this extensive training with long-term care and being in it with health care is they say, well, I'll just get on Medicaid. And that is not, I will say that is not the solution
that
that
is
you
not
need
a plan.
No, it should not be a part of your plan.
That
at
is
all.
not a plan because if someone, now look, there are people out there that absolutely have to have it.
Yes.
But that is not a plan. I hear a lot of people say, oh, I'm going to transfer my assets to my kids and I'm going to go on Medicaid. Not a good idea, okay? The reason is there's a 5-year look-back period on that transfer of assets to the kids.
Yeah.
Okay.
And this lady said that they looked back 4 months.
But
crazy.
Think this through. So let's say that is my plan. I'm going to transfer my assets to my kids. Okay. I've worked all my life for all my assets. Now I'm going to give it to my kids. Okay.
Mm-hmm.
Well, unfortunately, we live in I call it a litigious society here, where I call it litigation lotto.
Yeah.
Somebody, what if my kid gets into an accident and she gets sued? Guess where my assets are at? I just gave them all to them to get them out of my name. Now they get sued for something, may not even be their fault, and all of a sudden my assets are tied up in this lawsuit over here, and I can't do a thing about it. That is not the plan. Okay?
No, Medicaid should not be the plan.
That is not
for
the
this.
plan.
But so that leads me to, I guess, how there's difference. A lot of people think about traditional there's different long-term care policies and insurance. So
Absolutely.
What is traditional we'll get into the different types, but I want to talk about traditional because
Sure.
that's what I dealt with before
Okay.
with one little patient. I will never ever forget, I never forget it because she was paying a large premium. I think it was like $3,000 a month or so.
Wow.
It was very expensive for this long-term care policy, and now she needed care in the home.
Okay.
And we needed to activate it. And so she could, get the money that she needed to have care in the home. But then again, if she didn't use it, if we didn't activate it, she would have paid $3,000. I don't know if it was in a life insurance policy. She would have gotten nothing back from it. So can you
Absolutely.
kind of expound on what traditional long-term care is?
Sure. Traditional long-term care has been around for probably 30 to 35 years. Okay. It was the first thing that really came out to the marketplace to long-term care. And it's called a traditional long-term care. And I refer to it as a use it or lose it type contract.
Yeah, you get nothing back from it.
If you don't use the benefits, then nobody's going to benefit from it. You're paying a premium, i.e. your customer that you helped out was whatever that premium was, $3,000 or $36,000 a year, whatever the number came out to be, was paying that on an annual basis or monthly basis. But the way those contracts were designed were, hey, if you need the care, you're paying for it, you have coverage. And commend you, thank you for helping her start those benefits because
I had
she
no idea.
obviously
I had to get her policy out and read it. Thank goodness she had it, so I had could at least read through it.
One.
Yeah,
But kudos to you for helping her because she may have been paying these high premiums and never used it, passed away, and the company had gotten all of this premium money being paid to them, and they're not going to pay out any benefit. Okay, so traditional long-term care was just that: is you pay your premium as a consumer. It's a legal binding contract, and the contract says, hey, I pay my premium, you're going to provide me these benefits. It's a two-way street.
Right.
So I pay my premiums, and if I just step off the curb and get hit by the proverbial bus, I get nothing back. My family gets nothing. I've paid these premiums, and the insurance companies have always said, well, you had the coverage in place. You were covered. So you got what you paid for. Well, that's always kind of been a sticking point with those types of contracts because people were like, well, I'm paying, i.e. this customer, $3,000 a month for all of this insurance, and I do pass away unexpectedly, and I don't make any claims. I get nothing back. I've put all of this money out for years and years and years, and nobody's going to benefit anything from it. So that's always been a real sticking point with traditional long-term care. So
plus, isn't there a lot of underwriting, like
there's underwriting on all of it,
but pretty extensive.
Yeah, on all of
them. It's expensive, and there's health questions.
There's
underwriting
health questions, absolutely,
health
because
questions.
if I'm a company, you have to put in the perspective of a risk management. That's what they're doing. They're assessing risk, going, okay, this person's already 60, 70 years old, however they are, and do I want to take this risk on? And because we on the hook for this much money. If she goes on claim, how much are we going to get in? And that's it's that balancing act that they have to do. So yes, there's quite a bit of underwriting to traditional long-term care. So back to the kind of the types that are out there. So insurance companies have listened to the consumers, okay? And they've come up with a lot of different types of ways of obtaining long-term care now, where it be, okay, traditional is still out there. And I would say nothing wrong with the traditional, like we talked about in the luncheon today or the workshop, because something is better than nothing, okay, for people. And a lot of people still say, hey, I want the least expensive thing I can get, and I'm not worried about passing anything on to my kids. They're going to have my retirement. They're having everything else. They got the property, whatever
There's
the
something to
situation is.
fit everyone
Exactly.
and their budget and their needs out there.
So with that being said, though, a lot of other companies have designed contracts out there that they're called hybrid products nowadays that are built on a life insurance chassis, okay, where someone can either pay annual premiums, monthly premiums, they can do single pays nowadays, and say, you know what, it's built on a life insurance platform, so if I need care, I have access to the long-term care. I still have all the same benefits of any traditional long-term care, but if I don't ever use it and I just pass away in my sleep, my family is going to get the proceeds of the contract in the form of life insurance paid back to them, tax-free.
So you said today in the workshop about this particular product that it, what did you say? Well, finish your thought there, and it'll come to me.
I was just going to say that the products have evolved by supply and demand by the consumer, and companies have listened. There's a lot of companies out there that offer these types of products. We have, I think, 6 or 7 of them on our platform, maybe 8 of them on our platform that you have access to. And here again, everybody has their niche. Every company has their niche. So therefore, we can help what it is.
I'm sorry to interrupt you because it came to me while I was thinking. I knew it would come to me. But you said that it's not necessarily, so a product like this built on the life insurance chassis, it's not necessarily used for the specific purpose of life insurance.
Absolutely.
It's used for the purpose of having long-term care.
That is correct.
And if you end up not using it and you pass away, you get it as a life insurance policy. So
I hear a lot of people when I show this concept to people, they're like, "Oh, I don't need life insurance." I'm not saying you do.
Right.
Okay. It's you're not doing this because you need life insurance. That's not the need at this point in your life. Okay.
We're talking specifically for
long-term care, but it's built on a life insurance platform or chassis, so to speak.
Yeah.
Therefore, if you never use the long-term care, the family is at least getting your premiums back to you. That's really what the gist of it is. I mean, if you were looking for life insurance and paying the premiums that you would pay for long-term care, you would get a lot more death benefit.
Yes.
Whereas in this situation, I put in X number of dollars, I'm going to get in my money plus a little bit more. It's not going to be massive amounts of life insurance. So it's really, if you want to think of it, it's kind of return of premium with a little bit of growth on it. That'll go tax-free.
So it's mainly used for, the purpose is for long-term care.
It's a long-term care position, okay? Right. It is designed for long-term care, but if I don't use it, my family's getting the money that I put into it back, tax-free.
So so I know we're working on a case right now. We're working on some of these cases. And so is it this type of option more geared towards maybe a healthier individual? Because you said there's underwriting on everything.
Yes, there's underwriting on it because the company is on the hook for life insurance.
Right.
So if I purchase this and go through underwriting and I pay for it and 2 months down the road, God forbid, I have a heart attack and die, they're paying out a life insurance claim, okay? Or if I have a heart attack and I need the long-term care to help me, then they're paying a long-term care claim. So you are going through underwriting for kind of both, okay? But it's more leaning towards the long-term care underwriting, okay? So the what you were referencing a second ago, like the cases that we're currently working on together, if you remember that couple, one of them's really healthy. The husband has some health issues from the last over, I think, 10 years roughly. Yep. There's some health issues there. So we kind of talked to those particular clients and said, okay, we might have to attack this plan in 2 different types of products, so to speak.
Right.
One of them, the wife, I think takes really good care of herself, and we're leaning more towards the life insurance type plan for her. The husband, There's another contract out there that's built on an annuity chassis, and there's very limited underwriting on that. The underwriting on those particular type contracts is more from a cognitive standpoint. They want to make sure that you're not getting ready to go into.
We clarified that today about the cognitive questions. You know, it's like the mini mental exam. You know, where you're asked to spell world backwards, and I'm like, I'm not sure I could pass all those questions. But you know that they're basic, common cognitive questions. You know,
that's what the interview on the other end of the phone is designed to do.
And it is not a healthcare clinician that's interviewing.
That's correct.
You.
So,
you know.
Okay.
Let me ask you this about the life insurance and long-term care, and I want to ask this too about the annuity option as well. So let's say that I get this and something happens where I'm going to need care. Is there like a waiting period that I have to go through?
Yes.
In order to activate that?
Absolutely.
Am I off the hook out of my own pocket first? Because that's kind of what traditional was. This little lady had to pay for it out of her pocket. There was a 90-day waiting period.
Yes.
And she had to pay out of pocket.
I'm glad that you talked about this because I actually spoke to this afternoon after the workshop. Mm-hmm. There was a couple standing in the back that I was talking to, and we kind of went down this path. And if you think about it, long-term care has a 90-day elimination period. That's pretty standard.
Yeah.
Okay? Well, we just talked a few minutes ago about Medicare paying for how long?
About 100 days. Now, that also, let me clarify this, too, for those that are listening about Medicare. Your different options of Medicare. It's easier with one option of Medicare to get that 100 days versus the other option. It's easier on original Medicare to possibly get that 100 days fully covered than it is with the Advantage plan.
That's news to me.
Yeah,
That helps me.
So,
that's a world I know
when
very
you're
little
talking
about.
That Medicare covers the 100 days, without knowing the different options and how they cover you in Medicare, you are quoting what original Medicare
is. Right.
Not the Advantage plan. So I want to clarify that.
Sure. That's
so we're
great.
just talking
that's
original
original
Medicare.
So the ideal situation, like I told this couple this afternoon or right after our workshop today, the ideal situation is, here again, I'm going to play the patient. I had the stroke. I go to the hospital. They saved my life. Doctor says you need rehab, and I start this Medicare 100-day timeline. The ideal situation is if I have a long-term care, ideally my wife needs to, or my caregiver, whoever's going to be making my decisions, needs to notify the long-term care company if I have an insurance policy to say, hey, Gene's starting rehab. Therefore, that 90-day elimination period and that Medicare start, and they go step for step through that 100th day. Therefore, at the end of the 100 days,
you're ready to use it.
When they look at the family and go, what's the plan? They can go, okay, we've already satisfied the 90-day elimination period. And voila, the plan starts paying. Or guess what? Everything doesn't have to be a bad choice. Let's say I start my 100 days and I notify the insurance company to start the clock ticking, and I go through the 100 days and I recover. They can call the insurance company and say, hey,
we don't need it now.
Gene doesn't need it. So thank you, but turn it off. We don't need it. Save it for a rainy day. Save it for down the road. So that is the ideal situation that people should be doing when they have these incidents happen. But that's not the norm. The norm is, like we mentioned, at day 75 or 80, the facility will ask the family, okay, Gene's not making any progress. What's the plan? What are we doing afterwards? And that's kind of when they have the deer in the headlights, and they notify the insurance company, and guess what? There's that 90-day elimination period. Now I got to fund the next 90 days, 3 months worth of care out of pocket, which is not cheap.
Nope.
We've already discussed that. So that's unfortunately the normal situation, because people just don't know these timelines and how they really need to interact.
Right. Well, I want to rewind here and clarify, because I know people will listen to this. So let me just clarify. Medicare does cover the 100 days in skilled nursing. Well, an Advantage plan is supposed to cover by law what original Medicare covers. However, you're dealing with an insurance company with an Advantage plan, so it takes a little bit more of a fight sometimes to get that full 100 days approved. Okay, it's a little bit easier on original Medicare, and sometimes it's a little bit harder on an Advantage plan. I just want to clarify that for those that are listening, but typically they'll cover. Yeah,
I'm
yeah.
learning.
So it's just a different way to navigate the healthcare system. Advantage plans just will they'll cover so much, they'll approve so much because it's an insurance plan. So
Sure, sure.
they cover different, but overall, Medicare does cover 100 days.
Okay.
In skilled nursing.
So, but that's usually the timeline and how these things kind of play out. Okay.
Right.
So, I think you were asking would be the other type of long-term care that we talked about in the workshop today.
The annuity.
Was the one that's built on an annuity platform. Okay. The reason that one is so appealing to a lot of people, as we age, we usually get more conservative. Okay.
Yes, that's true.
And there's a lot of Americans out there that have annuities. They're sitting on them. They bought them forever ago, and they have a lot of growth in them. They put in, I don't know, X number of dollars, and now it's doubled or tripled.
Saving them for when they need them.
Saving it for a rainy day.
Fund. Yeah,
It's
not
the emergency.
activating them and just.
Okay, and for instance, I mentioned it today in our workshop. My mother-in-law passed away. She had 5 of them, and guess what? She was on long-term care, and she was still saving it for a rainy day. It was their emergency fund. Well, they had gone through the Great Depression, so they weren't spending anything, okay?
They probably a lot of money in her mattress, too.
They kept the ketchup packets from McDonald's. I mean, they didn't throw anything away. So she was always saving these contracts for a rainy day.
Yes.
She needed them now. And we actually had to turn one of them on to supplement some income, but still, she had all of these annuities 5 of them that she ended up, when she passed away, got split up between the kids, and they had to pay the taxes on the growth in the contracts. So the reason for all that being said, in 2006, Congress passed a bill called the Pension Protection Act. It actually took effect in 2010. Well, what it basically says is if you have a Pension Protection Act compliant annuity and the annuity is Pension Protection Act compliant, if you use it for long-term care, the proceeds will come out tax-free. So, but there's very few of these out there. I know of 3 companies that actually offer these particular types of annuities, okay? But they're really designed for long-term care, whereas the other annuities that everybody has out there is designed for interest growth, okay? So the one that we showed today showed a 70-year-old lady repositioning because she had the money in an old annuity sitting somewhere else, okay, that it was her rainy day fund. So I was able to show her to say, if we take this money that's sitting in this old annuity, this $125,000 of non-qualified money, reposition it into this Pension Protection Act compliant annuity, and you need care, you get to access all of the money tax-free. And in that situation, if you remember the numbers that we looked at today, on a 70-year-old female repositioning $125,000 of her money, and she still get to keep that money. It's still in her name. We just moved it from one contract to the next, ended up purchasing her $318,000 worth of long-term care benefit. So,
and that comes out to what was that?
$5,300 a month or something like that.
Now, if you're living in a facility or something or community that costs $8,000, you're going to be off the. You're going to come up with the difference.
$3,000, right?
But having $5,000, work for you.
What I see a lot of people doing is most people can't take on the full brunt of all the cost. Okay, if it's $9,000 a month, they're like, hey, to buy a long-term care contract that's going to pay out $9,000 or $10,000, it's going to be expensive. So a lot of people will put a plan in place and they go, okay, if I can come up with $5,000 or $6,000 of long-term care, I also have Social Security that I'm getting for $2,500 to $3,000 a month. Those two together gets me the $8,000 or $9,000. Okay, I'm good with that, because at that point you're starting to look at these products, these services Social Security and the long-term care put together as streams of income that will be coming into the house.
Yep.
Because really that's what I want people to, when they think of long-term care, I don't want them to think of nursing home. That's the first people
No.
thing.
Most people want to stay
in their
at home, age in place. I used to
Correct.
be really, and I still am. I think that's the best environment to rehab in. I think that's the best environment to stay in.
It's where everybody
all the
wants
way.
to be.
Yeah, you want to be in your home.
In your home.
Around your family.
So, but the way I'm trying to position things when I talk to people or education like today in the workshop is, don't think of the long-term care as an insurance policy. Okay, I want you to think of it as an income stream, because really that's when you need it and you turn it on, that's what it's going to do. It's going to give your family an income stream to cover the full cost if that would be the case, or to supplement with your Social Security or however else you want to supplement it, or a pension plan that you can supplement it with, but it's a stream of income. That's what long-term care is. That's what it does. It gives you, the patient, or your health care provider, whoever that loved one may be, the ability to decide when, where, and how you want your care.
And it's not always in a community.
No, absolutely
That's probably
not.
the most expensive care. I want to bring this up because this was a real big passion of mine, is home modifications. I'm going to throw that in there, not to confuse things, but we were talking about this. You were given some scenarios about what that money could be used for long-term care.
Correct.
Whether it was, with the life insurance chassis or the annuity chassis. And let's say you just need a caregiver for, 2 times a week, or, whatever. Everybody's treatment plan is different of what you need. But Medicare also doesn't cover home modifications.
No.
And
So-
and that's what you need if you need a ramp, or you need grab bars, you need a bathroom
Absolutely.
remodel. You need to modify your house for aging in place so you don't fall, basically, and you can stay as independent as possible in your own home. And when you mentioned that, it's like, oh,
Well,
wow, that's awesome.
Let's kind of go down that path a little bit. These carriers nowadays that are out there, and I don't want to start talking company names,
Right,
but
right.
all of the players that are in this space, they're all in, okay? And what I mean by that is they know the average American has never had to make this plan. And I think I mentioned that today, that I actually had to help my dad because it fell on my plate,
Right.
okay? And I didn't know where to go, where to start, how to do it. It was completely out of left field.
And most people are in
most
your
people
shoes
don't.
like that. They
Okay,
don't know
so
where to go.
what these companies have now started doing is they have resources that are there. If you purchase a long-term care contract, you have, I call it a phone a friend. They have concierge services in their back office. That the one company I'm thinking of is if you or have a long-term care incident, there's an 800 number that you will call. They will send your loved one, whoever that person is that's handling the care, they will send them the forms, but they will create a case number going, okay, Gene, your case 820. And my person handling my care will have a direct phone line to call and talk to this claims concierge, what it's called, and they will give them my case number, and guess what? This person will pull it up in the system, and they have that phone a friend the entire time that the patient.
It's like a caseworker. So
It's exactly what it is.
when you're actually having to activate a long-term care, or just because you're going through a life incident, that alone is stressful.
Well,
And having
it
that
helps
person you
that-
can call.
well, and that's what, there's a lot more benefits to it. Everybody just thinks of, oh, it's going to give me $6,000 a month to help me pay for the care. But there's a lot more benefits to it. And the guy I work with a lot, and he'll actually be in Louisiana next week with me, he talks about this more than he talks about the income stream. He talks about the concierge service, that, hey, this is there for your kids to call, that, hey, mom or dad need this care, a doctor's prescribed this, where do we go? How do we start? Now, they're not going to tell you exactly you have to use this person. For instance, in Baton Rouge, they may say, okay, Gene, or my wife, there's 10 places that provide this type of care, okay?
Yeah. Just to
They
have
kind of
somebody
give
to
you.
go to, a
That's correct.
resource,
Okay.
takes so much stress off of an individual.
So that's one of the benefits that these companies have, resources. A lot of them will also have you can get a portion of the policy up front to help make those home modifications. Like, let's say your benefit's $6,000 a month of long term care benefit. They will give you 1 month's worth of $6,000 to help you put in those grab bars, to help you modify whatever
But
needs to
yeah,
be done. There's also some benefits in these contracts that help someone hire a local person on the ground
hmm
that is a specialist, okay? Because nowadays our kids live all over the world, okay?
yes, and
I mean,
I'm
they're all
connected
over,
to companies that will
okay?
do that. That is
So,
awesome.
so if I'm living in Boston and my parents are in Louisiana, and I'm coming in, hey, I'm coming in because I got to go
hmm
make sure things are taken care of. Mom and dad are
Yeah,
elderly and they need this care, but I don't have a month to stay in Baton Rouge. I got to get back to my
nope.
life in
And
Boston.
that
Okay,
happens more times than you think.
so
Yeah,
I can take 1 month of benefit out of this contract, and I can pay someone in Baton Rouge to say, hey, I'm coming in 2 weeks. And this is the orders from the doctor. Here they are. Line all of this up for me. And they will put a plan together so when I land, I can come in, meet with that person, and we can go check out this facility, that facility. We can do this. We can do whatever we need to do. They've run all the groundwork. They've run all the legwork on it. I'm not I'm not getting away from the care, but they're helping me put the plan
right.
together.
They're a navigator for you.
They're a navigator.
Navigator.
A
They're a
navigator.
navigator.
So these plans are much, much more than just a financial dollar amount that people are going to come. There's a lot of resources that all these companies are now putting in place behind the plan because they know the average American has never done this before.
No, and it's
And it's a daunting task.
yes. And so if it's not done, I will tell you this: if you don't have something like this in place, it falls on the family, and like you said, they don't have anybody to go to. They don't know where to go. Where do they go? They go to the healthcare provider.
Yep.
And that's what I did when I was in home health. And you have somebody with a health incident that needs longer care than what you can provide, and that what Medicare covers.
Yep.
You're the one that's having to try to navigate and help them.
And most people aren't going to do what you did.
Mm-mm, no.
You did the right
Yeah.
thing by helping that customer because that's who you are. You're going to
Yeah.
take care of the customer, but most people aren't
And
going to go
they
to the extension that you went.
So what I like is that some people have their annuities in place or their life insurance in place, and kind of what you do with that in partnership with me is you can evaluate what they have. If they're interested in long-term care, we can just
Correct.
move things around, so it's not like you have to write a check for
Absolutely. And
$125,000. It's
that's
not
one
like
of the
that.
that's one of the biggest things that I try to help people accomplish this. Okay, if they need the care, our lives change obviously from when we get out of high school, college, get married, have a family, have a home, pay for the home, get them out of college, be empty nesters, and so on and so forth. Well, through our lives, we're picking up whether it be a life insurance when we first have our kids, whether it be just different things, annuities that we put in place for that rainy day, or I'm going to use it to supplement my income. Well, maybe down the road, I don't need that annuity as much as I once thought I was going to need it. You know,
Right.
we've invested well. Hopefully, the stock market's done well. Whatever it may be, and you have these, I'm gonna call them buckets of money in different places. Whether it be a life insurance contract, an old life insurance contract that has cash value in it. So I try to look at the entire picture of the customer to say, okay, we come to an agreement. We think we need this, put this long-term care in place. Now let's figure out how we're going to fund it. And
Right.
a lot of times we can use old life insurance, cash value that's in a life insurance policy. I call it spent money. They've already paid the premiums. That money
Right.
is in
Right.
there. Let's reposition that. And I'm using those words very, very for a particular reason. That money is spent. Let's reposition it from one place to another to a need that is now pressing. Whereas when you took out the life insurance policy, you had young kids, you had a mortgage, you
Right.
had these
Right.
debts. Now that's kind of checked off the bucket list. Let's reposition that money over here to now take care of something that we might be dealing with in the future. Same thing with the annuity. So it's a good, I call it a good habit to look at your overall, everything that you have. And when I do make these recommendations and help people like yourself with clients, first thing I tell them is, look, let's look at the least performing asset.
Right.
Let's find, i.e., the CD
And
that's
make it more
sitting in the bank.
productive.
Exactly.
Make
and
it
make
more
it more
productive.
productive. Never
Yeah.
use anybody's
Let it work for you.
something
Yeah.
that's making 6, 7, 8% rate of return.
Right.
Find the low money market, a CD that's not hardly doing anything, and make it work harder, as you just said.
So I can't believe that we've like talked an hour about this. I thought we were going to have to fill a whole hour with long-term care, and I don't even think we covered everything.
My wife and kids could easily believe it.
I could talk about Medicare for an hour. Just let me go down that rabbit hole. But no, but so we're wrapping up on our hour, and we seriously, I think what I want people to get out of this is that long-term care is necessary. Well, basically having a plan.
That's the key.
Having a plan and being willing to talk about it before you actually need it is the smartest and the wisest thing to do.
Yes.
I think it's better to have that all in place before you hit the Medicare age, before you hit retirement. People don't want to talk about it because they don't want to think about end of life, but it saves everybody a burden. Everybody, including yourself.
Absolutely.
You know, to have a plan. Just make it a part of your everyday. It's okay to talk about.
That is correct.
It is okay, and that you're not out. Make sure you're saving those dollars or making your retirement income work for you.
That is correct.
And
absolutely.
not draining it with care that you did not plan for. That you needed, you know, because you're going to pay for it one way or the other, or your children are going to pay for it.
That's what I tell my kids all the time. Life is about decisions. Someone will pay the price one way or the other. Whether you pay for it, they pay for it, someone pays the price.
So ease the burden. You know, there is being an occupational therapist and what I dealt with caregivers, family members that took care of their loved ones, we talked a lot about burden of care. So having a plan in place can definitely ease that burden of care.
And let me say this. Yeah, I have a really good friend of mine in Baton Rouge that kind of works in our industry. And she always says having a long-term, if you have a long-term care insurance plan, that does not relieve the family members from being engaged.
No.
It gives them the ability to manage care than perform care. That's
and
huge.
It does. Yeah, and it gives them the tools that they need.
That's correct.
To properly care, I would say,
for that loved one, right?
Yeah, holistically care for them. So, I don't know if I've missed anything, but I just
We've
think
covered a lot of ground.
Covered a lot of ground. Having a plan in place and knowing how you're going to fund it, because Medicare doesn't cover it. And so if if someone needs a consultation, they can do it through Morgan Medicare Solutions, and they'll get
absolutely.
You will be my partner on that.
We will work together with them to take care of whatever
properly
the situation
assess
is.
the whole thing. So,
and the last thing I kind of want to end up with is a plan does not always necessarily mean an insurance plan, but whatever your plan is, talk to your loved ones about it. Make sure they understand where your important papers and documents and all of this stuff is at. Because think of this. We're sitting here talking about it like I made the reference that I had the stroke earlier. If I have the stroke, I very possibly may not be in the frame of mind to make these decisions. So you need to share this information.
I told that to Brad the other day. I said, I want a notebook. And I used to tell my patients this.
Absolutely.
I want a notebook with everything in it, all of our policies, all of our money, where does it go, who do I need to call, all the passwords. You know, a plan is a plan.
That's right.
Whether it has to do with an insurance policy or whether it has to just, you're right, whether it has to do with your loved ones.
So share this information with your
Everybody be on the same
whoever that
page.
trusted person is in your
That's
life.
right.
Because they will be the one
And
that
don't be
has
afraid
to
to
implement
talk
this
about
change.
it.
That's correct. 'Cause
Don't be afraid.
That doesn't mean it's going to happen.
No, but you're smart and you plan.
That's correct.
So anyway,
Thank you for having me.
Yeah, thanks, Jean, for flying all the way in. I feel pretty privileged to have somebody fly in to talk to me. So anyway, but I am signing off. This is Morgan Medicare Minute with Nicole Morgan and Morgan Medicare Solutions in Sherman. So if you want a consultation about your long-term care needs, you can call our office, 903-815-0656, or you can find me on the internet, morganmedicaresolutions.com. So anyway, thanks again, Jean.
Absolutely.
Y'all have a good night.